So what do you make of it? Are they getting it right?
I think it was the appropriate step to take at this time in the light of the exceptional uncertainty that has been created by the July 27 decisions and communication of the Fed Reserve Chairman Powell. The uncertainty about inflation evolution ahead is enormous, whereas the guidance has been dropped, and the fact there could be nasty surprises ahead. So the RBI has done the entirely correct thing to safeguard the economy and shocks to domestic inflation, exchange rate, and the current account that could potentially arise ahead. The Fed could possibly repeat the mistakes that it made in the inflation readings last October to November. And the possibility of that repetition cannot be ruled out. So in that context, the RBI has chosen to front-load interest rate hikes, been hawkish on inflation, and its renewed commitment to inflation is just absolutely the appropriate thing to do at this juncture.
Renu, quickly, a bit of brevity would be nice. Could you give us a sense of whether the Reserve Bank is actually more concerned about the value of the rupee than inflation itself?
Let's put it this way, the two are not entirely indistinct, and so it's impossible to disentangle the two. In an inflation targeting regime, it is the case that domestic inflation, while trending down and appearing to have peaked, is coming down, but at the same time, it is remaining way above the target, and that does reflect upon the rupee. My own view is that the considerations of the interest rate differential and exchange rate pressures would have played upon the central bank's mind for sure. But at the same time, the fact that inflation has been above the target and the renewed focus upon that, they are not taking any chances. The second thing is that there is uncertainty even about the domestic food prices.
Renu, you talk about how the RBI is front-loading. How much more must it do, given that the Fed is expected to continue to be aggressive?
Yes, that is the critical question. In my view, there is a lot of uncertainty about the evolution of inflation and growth dynamics. As of now, the terminal rate of the U.S. policy rate has moderated, has been adjusted downwards, and of course that has an impact upon the Indian Indian policy rate at the end point. So the question is, when do they want to adjust? My sense is that it would be sooner than delaying adjustment. However, it is extremely critically dependent upon the evolution of inflation and growth dynamics. I think in the next 2-3 months are critical from the standpoint of the domestic evolution, especially food prices and the monsoon, around which there is a lot of uncertainty, and the global evolution of inflation. It is yes.
So fair to say, Renu, that India's GDP target of 7.5% is at risk?
In my view, it is. Most analysts, and including the central bank, have retained their GDP forecast after the previous round of lowering. But the quarterly results especially the FMCG companies, do not reflect a very great rebound in rural consumption, and that is a critical concern regarding the uplifting of aggregate demand ahead. Second, export growth is likely to weaken in the face of a slowdown of external demand. That will have a feedback effect upon India. It'll be a drag down on GDP growth. And the third is the extreme uncertainty between external and domestic demand, which will weigh upon domestic investment, of course. The revival of private business spending is also dented by the elevated uncertainty abroad. And these are not really ideal conditions in which private investment can contemplate capacity expansion. So I think that there is a risk to GDP growth of 7.2% or whereabouts ahead, and there could be further downgrades in the year.
Very quickly, and it's very hard to get this sort of data. I mean, it does show up in some of this high-frequency stuff, but do you have any idea how, which is a major component of the economy, the informal economy is faring?
The informal economy is reflected in our the lack of suitable uplift in rural consumption as from the FMCG results, from the subdued sales of two-wheelers. And that is something that's a critical indicator that I look out for in the absence of any meaningful or significant leading indicators for the informal economy. So if we can see that the two-wheelers continue to be, there has been a bit of an uplift in last month, but not significantly so. And as long as we can see that despite the good monsoon, the bike sales have been continue to be dampened, and the fact that there is enough evidence preceding this to reflect a K-shaped recovery. It can be seen in the contrast between the sale of luxury cars and the depressed bike sales. So the revival of the informal economy is not very optimistic.
Right.